Guys, let me know if you can view the screen now.
Perfect.
All right, sweet deal. Yeah, I hope you've been doing what you got to do, okay? Because again, I'm still gonna hit you up and check. All right, so don't think I forgot. All right. But again, you know what it's for, right? What up, Nikki? You know what it's for. You know it is to improve, what we're trying to get at. Okay, so I know life is life, what have you, but again, I'm gonna check on you to see, hey, where we at with it, right? And then take it from there. All right, so just know. All right, that's great news. That is absolutely what I want to hear. Okay. And I'm sure because you've been doing it, you've been noticing something. Okay. That's key. All right. Just really getting to start to see something, right? Everybody is wanting to see something in their trading. But again, people aren't really doing what it takes to see something. All right. But yeah, you got it. The accountability, big time. All right, guys, just a few more minutes and then we will rock and roll. Again, if you guys got anything that you want to touch on, please pop it in the chat and we will go and cover whatever that may be.
I saw someone mention a video on liquidity. Was it just from one of our lives or live training that it was from, or was it something else? I missed it if it was.
A video on liquidity?
I think she mentioned it was a video. Yes.
Ariel. So
yes, Ariel. Yes.
Yeah, she's in here, and she mentioned it, okay. but I think she said that she was going to go and watch a video on liquidity. I don't know if she actually posted a video on liquidity, but Ariel.
Okay. Again, no, I have a couple videos that I'm watching, but I'll post the best one. But I've just been watching a few off of YouTube.
Okay.
Oh, okay. Yeah. Thank you.
And I'm confused.
So I take it that might be something you guys want to jump on or touch on today.
That'd be great.
All right, sweet though. So here.
If you're referring to homework too, like you were talking just a minute ago, is that just from showing up, or is it something that I missed? I'm actually visiting some of my kids in New York, so I may have missed a little bit.
Okay, well, no, let me break it down. So,
okay.
For Dee's situation, we have she's booked a session with me, and we've gotten together a plan that she needs to go by. But I do give homework, right? So I can shoot you the homework, Lisa, so that you can do this primarily over the weekend. Is when I feel like you guys should have the time to do it. But again, you could probably do it during the weekday. You know what I mean? If you have the time. But I will send you some homework to do, which again, when you're going through it, you'll see why I'm asking you to do these things, because it all comes together when you're trying to trade. You know what I mean? And it's the things that give you an edge. It helps you level up a lot quicker than if you did not do the homework. You understand what I'm saying? So you'll see it's going to force you to become better. All right. And I'll get that to you.
Thank you.
No worries. Hey, can I get a little bit of that help too? Absolutely, bro. I'll send it to whoever wants it. And again, just put it in the chat for me real quick, so that I won't forget, because I do got to run after this. Send me homework, all right, in the chat, and I will get that to you guys. This is falling, not rising. All right, so once I clean up this chart, we will do liquidity right out the gate. But I did make the session open for everyone, so kind of just wanted to give everybody a good amount of time to make it, because again, it was somewhat, not last minute, but it was a short notice. So a lot of people are having their Sunday fun day with the family, or just out and about. So I understand that they may not have been able to kind of make it in time. All right, so thank you, Nikki. I want to discuss the order block. Is that the same as liquidity? They work hand in hand. This is an order block. Well, it's a gap, not an order block, but the order block sits. Let's just do this one right here. All right, so I'll just mark this whole candle, even though it's really not that whole candle, but I'll mark it. And I'll just bring it here. And again, I will make it my order block, because I know order block sits within this high point. So the order block is not, I said it works hand in hand, but it's not the same as liquidity. Okay, the order block is showing you that this is most likely where the sellers are, like where they live. Okay, it's most likely where the sellers live. Liquidity is all of those sellers who left their house. Where do they have the safe in their house that has all their money? They have it somewhere behind their house, inside of their house, behind, maybe they got it in the backyard, right? Maybe they dug up a patch in the ground and they buried the safe in there, right? Their money, okay? The money that they don't want to lose, okay? Or, doesn't necessarily have to be they don't want to lose, but hold on a second. All right. Okay, it's not necessarily that they want to lose it. It could also just be that they have some money. You know how when you get home, like you go out, you get something, you get home, and sometimes you got change, some dollar bills or something in your pocket, and you just throw it on the dresser, right? That money's freely, out somewhere sitting on the table in your house. Well, if you got company over, right? I'm always got people at my house. So if I leave that money out and that money happens to disappear, I have no idea who might have took it, because there's so many people in the house. But I know, my money was there and now it's not there, right? What I'm trying to get at is that the liquidity really talks about where the money lies. And when we're talking order blocks, we're just talking where the sellers are. When we're talking liquidity, we're talking about where they put their stop losses. Okay, and their stop losses is really, we say stop loss, but stop loss really is money. Okay. And it is liquidity. Okay. Liquidity, I know that word is like funny to a degree. And I remember, when I was hearing about it and things like that, I was just like, yeah, what is liquidity? What is it really? And then eventually you come to find out that it's synonymous, right? It has a lot of different names that can all mean the same thing. Ultimately, I found out that it's just money, right? It's just where the money sits. Okay. When you think about assets, right? They categorize assets. Like if you're someone who has assets, so when everybody's doing a budget, right, guys, we are trying to minimize our expenses, and we're trying to increase our income so that our budget looks pretty good, right? As far as we're making more money than we're spending. Okay, but a part of that budget, we have to see what assets do we have, right? So that you can know, like, what's your net income, right? So Nikki, you got a car, you got a house, you got a motorcycle, you got a boat, you got all of these things, right? Some of them you own, some of them you may not own, but at the end of the day, when you tally them up, right, which ones are you still paying and which ones are you not paying? The ones that you're not paying, okay, you can probably sell those, right? Because you own it, you can sell them and make money. But how quickly can you sell it, right? This is where the terms liquid and frozen or ice or whatever you want to call it come to play. So let's just say you own the boat and you want to sell that boat. Well, you can probably, if you're down here in Miami, you can probably sell that boat pretty quick, right? So you have a liquid asset, meaning you can liquefy or you can get money very quickly from that asset. That's why they call it liquid, because when you have water, you pour it, it pours out quickly because it's not frozen, right? It's not a frozen asset that you have. It's a liquid asset. All it really means is that you can make money quickly from it, right? You want to sell it, put it up, out somewhere. Somebody says, hey, I want that boat. Boom, bam. The next day you got your money, right? In Forex, okay, when we're talking liquidity, we're speaking money, and we're not necessarily saying how fast can you get money. That's not what we're saying, right? We're just saying, where does the money sit if the banks want to go and get it, right? So it's like your money is like an asset to them. Okay, hope y'all follow me with that. Hope like the light bulb kind of turned on a little bit. Your money is like an asset to them. They want to go and get your money as quick as possible, right? So it's like they know, okay, if I turn, if I put a bunch of orders in, I can turn around and I can go and get Nikki's money because I see it sitting right there. And you'd be like, what happens? What you see on the chart is you'll see, price falls down and then price pulls all the way back up, gets in the zone, does a little dance, and then does a boom. It just pops out of that zone just enough to hit your stop loss, and then it tanks in your direction. It just tanks. Look at the example, just right here, right? Oh wait, so yeah, boom. So we came down, a big drop, small pullback, did a little dance, gave us equal highs, and then dropped. But really, it didn't really go and get the money in this scenario. That doesn't mean that it's never going to happen. We're already headed on our way back up. Here's money sitting behind this gap, and there's still money sitting behind this order block. So they know that, and at some point and at some time, they're going to go and collect. Thank you. Go up, collect. Thank you. All right, we got all the money. All right, let's take it back down. Boom. Right. So, again, guys, when we're talking liquidity, we're mainly talking about where the money sits, where the money lies, where the money at, where is it? All right. And to know where the money is, all you have to do is think about areas of where traders may buy or sell on a given pair. So in this scenario, guys, I'm gonna come down to, like, let's say the 2 hour. Okay, let's reset. Guys, right here, people bought. You see major rejection with this big wick. This wick also major rejection of sellers. Okay, major rejection of sellers. And then what happens from here? Price just continuously rises. Okay, so guess what? If I was a buyer, I would have bought somewhere like this, probably off that bullish engulfing candle right there, and I would have my stop loss below the wick. So all of this red area, guys, is where the money sits. Your money that you don't want to lose, that's where this sits. So in this scenario, money is sitting behind support zones. Okay, but then you'll also have another scenario where you probably get in for a buy from here. All right, or possibly even here. Right, but you'll get in for a buy from here, and guess what? Your money is sitting behind the trend line. So again, that is another area of where buyers or any trader who's buying would place their stop loss, because they're looking at structure, they're looking at market structure, and they can pretty much see that price is failing to get below here, right? Or at least this is just the lowest that it's gotten to recently. So taking your chances with putting your stop loss just below that, right, is what most traders who understand market structure will do. So because of that, guys, all your money sits right here. So what happens is you'll see something like this, right? And I see this right now. This is a falling wedge, and we're getting ready to break out of the wedge. So people will buy, and I'm very tempted to buy from what I see. But what I know can happen, I've seen it before, is it'll come up, it'll get to just this level right here, right there. So it'll come up, get to this level, right? And what does it do? Push up just enough to take out the liquidity that sits here from anybody who sold it. Okay, again, you're selling. You sold from up here, right? You sold from up here, and you got your stop loss probably behind this wick, but you could have it right behind the trend line, right? Because you still survived it. Price still tanked down. But now, as they're breaking out of the wedge, guys, they go and grab that liquidity that sits right here, and then guess what? They got the sellers. First order operation. Now they push it back down. Boom, hit the order block, take out the liquidity of the buyers, and then guess what? Take it on up as what it's supposed to do. But look at the dirty game, right? The dirty game is the sellers got taken out, and then they dropped it. You understand what I'm saying? These people were in a sell. So if they just had their stop loss a little higher, right? But above, this is how it all comes full circle on why you need to place your stop loss behind the previous swing, because normally the previous swing is a good distance away to where the banks are not going to push it that far in that direction, because they allow traders to exit their positions. The banks don't want to do that, guys. They want to keep the buyers and the sellers trapped where you guys don't really know which direction it's going, so they can go and take your money. That's what it is. Pushed up, got the money from the sellers. Now it pushes it down. How disrespectful. Oh, come in your house, take your money. Thank you for the money. Oh, by the way, Bain, I'm gonna give you $100 next week. But I just had $100 on my dresser. What you mean? You finna give me back my money? What? Oh my goodness. All right. But that's how it goes. And then here they push it down. So the sellers are out of there. They got stomped out, but now they could have made more profit. You know, they could have had more money, but they just pushed this down because they know the buyers sit behind here. So they took the seller's money, took the buyer's money, and now they take off in the direction that the overall trend was telling you it was in anyway. This is why we follow the trend, guys. We don't, we can absolutely, trade counter trend and all that and get opportunities. But these are the reasons why you want to go with the trend, because when the manipulation is all said and done, they're going in the direction of the trend. So why not just try your best to stay in the direction of the trend? Okay. But liquidity, Nikki, sits behind support and resistance, sits behind trend lines. It sits behind moving averages. It sits behind any level or structure where traders would buy or sell from. Does that make any sense?
Yes.
Yes.
Cool. So what you got? Go ahead.
Okay, so I'm wondering what I said around. So what about the gaps?
Okay, so the gaps again. We went over the order block. Do you understand the order block?
Okay, are these two related? That's why I'm asking. Am I saying the wrong thing or whatever? Okay, because now I understand liquidity.
Okay, order block, gap, they're separate.
Okay.
All right, but do you understand order block?
Yes.
Are you sure? If you're not,
That's where I said that's where the buyer, that's where the sellers are.
Yes,
Order.
but you're right. But now tell me, why would I mark an area as a order block? Like what am I looking at to say that this is an order block? If in a downtrend, what am I looking at?
Because that's where it's probably going to pull back to price.
Nope.
Or no?
So let me tell you right now. Here, what you're seeing in this order block right here is that this is a high point. But you don't see any candles above this point. You don't see another higher point, at least in regards to where I got the chart, right? And even if I kind of zoom out, so like let's go, this is the 4 hour, let's go to the daily. Okay. Looking at the daily, you can see there's nothing really above this high point, right? There's no candles or anything above this high point right here. So coming down to the lower time frame, what constitutes a order block is when you see price rising up and then all of a sudden it starts to fall. All we're doing is looking at the last bull candle before the bears make price fall. This candle right here is the last bull candle. I know that it's white and you can't distinguish it as a bull or bear candle, but this is a bull candle. So I have this order block very, very wide right now because I grabbed it from a higher time frame, and I said I know the order block is in there. I'm just not fine tuning it. When you go down to the lower time frame, you can fine tune it. I'm going to show you what fine tuning looks like right now, but I'm going to initially grab that first bull candle before the drop. All right, and I'm going to pop quiz you right now. What is it that I will be looking for to place a seller's order block?
The retest.
No, not for you, Lisa. It's for Nikki. I'm sorry,
Okay.
but Nikki, what am I looking for to place a seller's order block? And again, don't feel any kind of way that I'm, on you, right? Just understand, I'm trying to get you to understand it, because once the light bulb comes on, it's game over. All right. But what am I looking for to call out my order block in a downtrend?
Okay, so you're looking for the sellers to step in.
Yes, I am. That's one thing. So when the sellers step in, how do I mark my seller's order block? What do I need to find?
You just said a bull candle, right?
That's right. But which bull candle? I know it sounds tricky, but think about it. Which bull candle?
I have no idea. I don't know. The highest one or the left?
The last bull candle
Okay.
before the drop. Are you with me on that?
Yes.
So again, this candle, I'm highlighting the entire candle from the wick to the wick at the top, because again, this is my last bull candle. If I change my chart and make this green, so let me just do that because I want it to make more sense. Okay, that's not it.
I mean, I struggle with this too. Order blocks are my worst thing to really identify. I'm getting better, but from one time frame to the other, like yours is a larger area. And like I right now understand what that order block is, but like as you go down, because I know there's order blocks on every time frame, but I'm really interested in this area as well. So help, I'm listening close.
Perfect, guys. So Nikki, order blocks are when you have nice V shapes like this. These are what we call swing points. So you're either getting a swing like this that looks like an upside down V, or you're getting a swing that looks like your regular V. And this is the swing point right here. In this turnaround, right, when price is going up, but then it starts to turn around to go down, you are going to have each and every time some bull candle that was the very last bull candle before price started tanking down. So do you realize after this, with this bull candle, there is no more bull candles? So I really want you guys to pay attention to that, because that's the tattletale sign of where you're going to mark your order block. Are you with me so far, Nikki?
Yes.
Okay. So now in the same token, right, this was our seller's order block, because when price is going up, but then we start to go down, we're just grabbing the last bull candle before price went down. That's our order block. But on the flip side, when price is going up, okay, right here, you see how price drops down, and even here, but you see how price drops down? This is your best example right here. So this is so crazy. This is our last bear candle before price shoots up. I'm going to highlight that whole candle and watch this magic, okay? From here to the wick, right? Watch this. I'm going to expand it out. Now, you tell me, did price get right back into this order block? This is now a buyer's order block, okay? That's what that is. It's a buyer's order block, because here is where the buyers stepped in. What about price coming right back to this order block, right in the middle of it, and then taking off once again, and even just going higher than it did before? And let me see, did it go in? Yep, it still even went higher going forward. So it did all of this, but never ever would have touched any of your stop loss. As it went high, yeah, you were down, but you were in this scenario, you were just down less money, like you weren't in a negative. Same here, you were probably at break even at this point, came back into profit, down a little bit, still in profit, came back into profit, down a little bit, still in profit, took off way more profit now, did a little dance, came up, way more profit now, pull back, did a little dance, way more profit now, pull back again, it's going to do another little dance, and you're going to be in way more profit. But guess what? You only got in from here, one entry point, one place of where you should be looking to enter your trade. And all it took was for you to identify where was the last bear candle before price shot up. Are you with me so far?
I got it. Yes.
Boom. So now you can see here, that big red candle was the order block. But now if we go to this one, that little small red candle is the order block. And we can stretch that out, see if anybody came and touched it. Nope, nobody came and got it. All right, we got another order block here, last bear candle before the push up. Nobody, well, it didn't, we probably got touched just a little bit, maybe not, but here, there it is. Okay, and you can just go on and on and on and on and on. Okay, but now for Lisa, this is what I want to show you. As I have this order block up here, which is on this 4-hour time frame, you're saying, you know, you go to lower time frames and you're getting confused about which ones are the order blocks. So watch this. 4-hour, I'm going to hop down to the 1 hour. Okay, and now I'm going to go to that point. Okay, get rid of this, get all the way back there. Okay, so look at how big this is, right? From when I drew it on the 4-hour. But when I come in here and I zoom all the way in, guess what? This is the last bull candle. But on the 4-hour, it counted all of this as that one big bull candle. So now, Lisa, I get to fine tune my order block. It is in the same area. The 4-hour, having it on the 4-hour, it gives more real estate as to where price can get up into and play around. But the more you can go to the lower time frame, the more you can make a more precise order block. Are you with me so far?
Yes.
So here, again, I was able to narrow it down and fine tune it some more. Now I'm just going to keep going down. Let's go to the 30-minute time frame. Let's see if we got anything that sits a little different with the bull candle. Here we go. Would you look at that? Now we really see on the 30-minute, this is the last bull candle. So watch me go back out to the 4-hour, and that line is going to look way smaller. than it did before. You see that? And I got at the very tippy top of that order block. So this, to be honest with you, right? You see how it's not grabbing the full bull candle on this 4-hour time frame? To me, okay, I won't use this that I pulled on the 30-minute time frame on this major time frame. Do you understand what I'm saying? I would use that order block that I found on the 30-minute time frame if I'm looking to enter off the 30-minute time frame. So you with me?
Yes.
On the 4-hour, I will be looking for price to get all up in here. All right, to where let's just do like a purple. Oh, that'll do. All right, but I want it to get all up in here so you can see the amount of real estate, right, where we have the difference. Okay, here, let me just see if I can bring it. There it is, right? So here is where I would be looking to enter off the 30-minute time frame, and right if I get price, you see how it touches right here. Let me zoom that so you can see that. So you see how it touches right there? I would have been looking to get into my sell on this 4-hour time frame as possibly as a swing trader, most likely. And then look, just completely tank. But guess what? If I was waiting for it to get to this order block that I found on the 30-minute time frame, it didn't get there. You see what I'm saying? So you wouldn't have even tried to think of getting into a trade off this higher time frame if you didn't mark this order block from this 4-hour time frame. Is that making any sense?
Yeah, it sure does.
Okay. So that's the beauty of the order blocks, guys. Nikki, the gap, okay, is different than the order block. What the gap represents is a shift in supply or demand. So, I don't know what you guys do personally, like for work and things like that, right? But I'm just going to create a job for you right now. And I'm going to say that you guys, sell sausage sandwiches, right? When you are, when you're checking your inventory, right? Let's just say you have a good day, right? Everybody's buying sausage sandwiches. And then, you get a group of people that, they come to you and they're like, hey, I want a sausage sandwich. But you check in the back and you ain't got no more bread, right? You might have some sausages, but you ain't got no bread. So now, what do you do, right? You're almost going to be out of supply, right? And because you're out of supply, well, are you going to be able to sell any sausage sandwiches? Most likely no, because I don't know who's just going to hold a sausage in their hand with all the toppings and just eat it like that, unless they're just that hungry, right? But everybody's going to say, oh, damn, Nikki, you ain't got no bread. All right, I guess I got to go someplace else. You're not going to make no money. You're not going to sell anything. Versus if you hit me up, hey, Bain, you got some sausage bread? I got you. Give me 2 minutes. Boom. I run to you. I give you a whole pallet full of sausage bread, right? Or hot dog buns or whatever, right? And what's going to happen in that scenario? You're going to be able to sell because you just had this increase in your supply. You with me? So when you're looking at the chart, how we evaluate a gap is that we're looking at any 3 candles. All right. We're looking at 3 candles that are back to back. All right. So we're not looking at this candle over here and then this candle over here and then maybe some candle over here. No, we're not doing that. We're doing 1, 2, 3. Okay. 1, 2, 3. Right. 1, 2, 3. Any 3 candles. Just pick your candles. Right. I'm going to mark up some gaps right now, and then I'm going to explain them. Okay. And I also put this in the Discord under the technical analyst channel. Right. I give you guys a lot of tidbits of these technical things that we learn about and we study. So make sure you guys go and check that out on your own time, just so you can see some of these things. Ghost, what you got?
Yeah, I had a question about that the seller's order block on that 4-hour time frame. You said you look for the last bull candle before the drop. Now, you consider that last bull candle from the close of the candle and the whole wick, right?
Yes.
Okay, but I seen something, I guess it was a smaller candle before it, and it looked like you had it over the whole candle, like a little bit over the top and the bottom of that candle. Maybe I was looking at the wrong one.
Okay.
And I wasn't looking at the full bull candle next to it, but I saw the smaller candle before it, and I was trying to make sure that I was looking at the right one while you was explaining it before you start going down to the lower time frame.
Okay, so right here on the 4-hour, you see like how I have it, right? It is pushing up a little bit. Let me get rid of this right quick, right? It is pushing up a little bit above the wick, right? You know what I'm saying?
Mm-hmm.
So is that what you're meaning on this, on right here on the 4-hour, or was it on a different time frame that you see like I zoned it a little higher than the candle actually is?
It might have been on a higher time frame because it was like a candle that looked like it was even smaller than a hammer.
Okay, let me see. All right, Kev, Sophia, Tanya. I'm not sure how to pronounce your name. It starts with an X. I'm gonna say Zoe, maybe. If I'm, tell me how to pronounce that. So I'm calling you your name right, because I definitely don't want to butcher that throughout the session here. But I don't know. Was it here on the daily, Ghost?
Can you widen it? Let me see.
Yeah.
I'm not sure I know it is probably that exact candle. I think that is, but yeah, you had it wider than that. And I'm like, hold on, which one was the last bull candle before the drop? But you had it over the candle and the end of the candle and the wick. So maybe I was looking at the wrong candle, but I know which one you were talking about.
Oh, okay. I think I know what you're talking about. So, I think when I had it on the 4-hour, and then I was fine tuning it for Lisa So I kept going down to the lower time frame, and when I went down to the lower time frame initially, I could fine tune it a little bit more, like on the 1 hour or 2 hour. But before I tuned it, it was definitely taking up way more than
Yeah.
than I think that's what you were talking about. But yeah, I mean, you get it though, right? You know what I mean? Like you get the order blocks, you get how I'm identifying, just simply identifying the last bull candle, no matter what time frame you're on, right? If you see a swing point, there's always going to be a last bull, a bear candle, and what you guys are going to notice is that price has a way of just always coming back to that order block or that gap. And again, this is part of homework that I'm going to give you guys, right? When you identify this and you see this, especially when you're doing it in replay mode, you're going to see that this is true, right? And once you see that, you're going to be like, uh-oh. So all I got to do is draw these simple order blocks, wait for price to get back to these order blocks, and then look for my opportunity to buy or sell. And that's it. Nah, man, it got to be something more than this. It can't be just that. It has to be more complicated than this. People keep telling me how hard Forex is. You got to show me something hard, because if you don't, I'm not going to believe you.
Then I got another question with that, with what you just said, man. So is that the case, even if it doesn't go all the way to that order block and actually touch it and then reverses, it's still saying it came back to that order block though, even though it didn't touch, right?
Yes. Yes.
Okay.
Yeah, absolutely. Absolutely. And guys, we're not just going to sell because it came to the order block. That's the other little kicker. So that's, I guess, if it had to be a hard part to this, that's the hard part, is that you got to wait. The hardest part is patience, waiting, not being so anxious to take a trade when it's not showing you what you need to see. That is very hard to do. I'm just being honest, because you see opportunity, but you're not waiting for your confirmation. So you sell, but you never really saw a seller show up. And then when it goes up and it hits your stop loss and it keeps rising, you're confused, because all you can remember is he said sell when it hits the order block. Nope. You guys can, review all the recordings. I always tell you guys, wait for the bulls or the bears to show up. When you get those engulfing candles, right? When you get those candlestick patterns, right? Ariel pointed out, what was it? The tweezer tops, all these different candlestick patterns. When you get those, the ones that are bullish and bearish, and again, if you guys go on the technical channel, you guys will see, I put them out there so that you guys can visualize and you can see, okay, sometimes guys print them out, right? Have them at your desk. That way you don't have to go to the Discord, click it, try to scroll down and search it and do all of that. Just print it out, put it on your monitor somewhere, right? Put it on the back of your phone. I don't care, right? Whatever you want to do, however you can get to it or view it easily, do that, because it's going to help you identify it when you see it on the chart, and then you're going to pull the trigger and it's going to be a wrap. Hold on, let me get what you guys are saying real quick. Boom, boom, boom. Fair value gap is the same as the imbalance. That is correct, Ariel. Yep, fear of missing out every single time. That will get you in a heap of trouble, man. You're thinking that if you don't sell once it hits that order block, you're gonna miss the drop. You ain't gonna miss nothing. I promise you. You're not gonna miss a thing. I really hope I'm convincing you guys not to sell prematurely, right? When price gets to your sell order blocks or your sell gaps, right? I'm hoping you guys are understanding that is just the first part, right? Is that it needs to get to your zone. You guys heard my song, right? I lay it out, right? It gets to your zone and you wait for the bulls or the bears to show up, then you take it. You guys start doing that, you're gonna see a world of a difference. Okay. Candlestick Bible. Yeah, and that's another one, the Candlestick Bible, right on the money, right? Those things will just help you guys put it together. It's a, I don't know what that word is, when you just constantly see the same pattern over and over again, right? But when you see it, you can't unsee it. Therefore, you start seeing it all the time, and you wish you can get it out your brain, but you can't. I can look at the chart right now, and I can say, oh, there's a bullish engulfing, there's a bearish engulfing, boom, boom, boom. I can just see it now. It's like it's almost like I don't even have to look at the chart. It's so bad, but guys, you want that. It's such a good thing, because now you're able to you're able to know that you don't have confirmation. You're able to know when you have confirmation, and then you're able to be patient because you know you need that. And that's what makes all the difference. The little things, guys, the little things. Okay, nothing difficult. But the patience and the discipline and the dedication, showing up, charting, it's boring. Let's be honest about it, right? Nobody wants to really go and mark up the charts, mark up this one. Okay, I marked up this one. I got to mark up this one and mark up that. It's time consuming, right? You know what I'm saying? And you're marking it, especially people who are marking it and they're not quite understanding if they marked it up right. You know what I mean? They don't quite understand if they chose the right order block. So all of those things, all of that doubt or not really knowing gets you guys to feel like it's hard. But it's not. That's why I wanted, Nikki, that's why I'm on you, Lisa, that's why I'm constantly questioning you guys. Do you really get it? Right? Do you really understand it? Because once you do, there's no going back. You guys will really be like, man, order blocks, got that. Gaps, got that. All right, candlestick patterns, I'm working on that, but I'm almost there. And now candlestick patterns, you got that under your belt. And then the next thing you know, you're going to start saying, Bain, I see what you're talking about. This is stupid easy. And as a matter of fact, I just set my alerts now to be at my zones. So I don't even look at the chart. I wait for my alert to go off. That way I know price is in my zone. And now I just give it another hour or so, and then I'm ready to rock and roll. Guys, it becomes ridiculous. Honestly, it really does. Is there a list of definitions or terms like fair value gap, imbalances, order blocks? Yes. Where did I put that? I don't know, DM me in the Discord, and I'm gonna find it for you. But make sure you message me so I can go look up where I put it. But there you go, there you go. Thank you, Kev. Appreciate that. And I'll still send you what I have. But yeah, that's it right there. So gaps. All right, here it is. One, two, three. I see a gap. I grab it from there and I bring it right to the wick. I extend it out just so I can, see what's what. Boom. And now I will label it fair value gap sell. Okay. This fair value gap sell, guys, I'm putting it as a sell because price is going down. The gap went to the downside. So again, here it is, at this green candle, Nikki, you were running out of bread. Okay. But then look at me. This is me, this big red candle right here. This is me. You made the call. And this is me running to the rescue with 1,000 buns. Okay. Big body candle. You can see this is even a bearish engulfing candle on top of that, right? It's super engulfing. But this is, again, me coming in with that bread. And now what you can pretty much expect is for price to continue falling. And guess what? It did. But it did a little manipulation. It went and took out the stop loss that sat behind, any seller who kind of sold from here, right? Took their stop loss out. And then what? Went on down, right? Dirty game, right? Again, having your stop loss. Hold on, guys. All right, sorry about that, guys. Had to take that. You had another gap below that one. Absolutely. Yeah, so Kev sees it, right? So I'm gonna show it. He's talking about right here. Boom, bam. There's another gap. But what I wanted to get at was, again, price. This is why, again, if you're gonna sell, you need to understand, right? So let's just say you sold, when price hit this gap. Well, really, you didn't really sell right here, right? So again, guys, it all comes full circle, right? What you were looking for, okay? So price made the gap, made the first gap, it pushed down. Now you want it to come back to the gap, but then you want it to show you that the sellers are going to show up, right? Again, just simple waiting, patience. Guess what? This is a 4-hour chart. 4 hours here, 4 hours here, 4 hours there, 4 hours there, and there. Guess what? You never got the bears to show up for all of this time. So now what do? You see the bulls coming, and then you change your bias. You go and you buy, and then boom, right? It's just what it is, guys. So one, we would have never taken the sell. Two, if you did just happen to sell, right, from this area, right, you may have had your stop loss very tight. Okay, but we're on the 4-hour time frame. That's not where the swing is. Okay, your swing is here and here and here. So the previous swing would be right here. The one right before that, which is really very close by, is right here. And then the very, very top swing is up here behind the order block. So let's just zoom out and show you guys that understanding what you need to do rewards you big time, guys. Rewards you big time, guys. If you're able to just stay in the trade and just, like, how to lock in profits, whoop, whoop, right? Down a little bit, up big time. Down a little bit, still up big time. Down a little bit, up big time. Guys, never really got nowhere near your stop loss. But I understand this is a fearful thing. Everybody dreads this. I was just like that. I was, I did it because I wanted to test it out. But at the same token, I knew that, man, I was risking so much more now. If the trade goes against me, I'm going to lose way more money than I wanted to lose. That is a psychological thing that keeps everybody in jail from, taking the trade. They're in the fear. Oh, I guess the market is open. All right. Alerts going off. But if you just follow the rules, guys, you will see over time, this stuff is concrete. It works. Yes, it's not 100% of the time, but it is a high ass percentage, guys. It is a very high percentage. So again, real quick, let me see. Are the gaps only for the big body candles? No, they're for any candle, small or big. If you see a gap, you see a gap, right? Sometimes the gaps are really tiny, so you can just take that with a, the same way, like, it's like Kevin Hart having a fight Shaq. You understand what I'm saying? Like, Shaq is going to take into consideration his size and know that it's probably not going to be much of a fight, right? So if you find a gap on between two small candles, right? Yes, it's still valid in the sense of a gap, but it can still easily be blown through. So again, you can circumvent that by simply doing what you've been doing, is being patient, waiting for the bears to show up. Guys, it'll never fail if you just wait. You understand what I'm saying? And even if you wait and you see the bears show up and then price just goes and does another hunt, and grabs your stop loss and then go in your favor, it happens. But nobody really, you guys haven't gotten to that level of knowing it happens, right? The moment you guys get to that level and you've been doing it enough and you're just like, man, that was a perfect setup, but the market just pushed the other way. Until you get to there, then you're not gonna know that that's how it goes sometimes. But I know that's how it goes sometimes. So I don't, my crying is over, guys. I mean, I was crying rivers before, but it's all over now because I know what's what. I know what it's gonna do. I know the possibilities, and I just keep putting myself in position for when there is opportunity. That's all you can really do. So get the fear out, guys. All the woulda, coulda, shoulda, blah, blah, blah. Take it, see what happens. Then make your judgment from that. Because I guarantee you guys, you'll have way more things going in your favor than you have things going against you. And then that's when you realize, holy shit, I was in my head. But you'll never see that if you just don't, try what I'm saying. Okay. But here it is, right? So those gaps is right? 3 candles. One, let me get it back. So 1, 2, 3. We see the gap. I take it from the bottom of the first candle and I take it to the wick of the third candle. Somebody's wondering, Bain, well, why didn't you put it to the body? Okay, because that's not really where the gap is. All right, price, they don't share price. This candle and this candle, this is not where the gap is because price actually got up to this point. So that's what you have to go by, right? This is the official gap because there's no place that this candle has gotten into in this area, and there's no place off of this candle that the candle has gotten to in that same area. So that is the official gap. Here, putting it down to here, yeah, that third candle didn't, it didn't get anywhere down here, but the red candle, it did. You see what I'm saying? It got into this price point. So we're not going by the body when we're doing the gaps, guys. We are going absolutely by the wick because the wick is telling us where price has gotten to. All right. The body is telling us where price is closed. We don't measure the gaps off of the closes. We measure the gaps off of where price has gotten to. All right. So make sure you grab the wicks. But I'm just going to mark these out, right? So I'm just going to, Nikki, are you with me so far? Like, are you understanding these gaps at all?
Yes, a little bit.
All right. So here, all right, just looking at these candles, 1, 2, 3, no gap because, well, a tiny gap. This would probably be what Ariel was kind of getting at, right? So here, very, 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 very tiny gap, right? So I put it and it'll look like this. Bring it down. Boom. But now look, this is a buyer's gap. Nope. Okay. And guess what? Oh man. So we gap, right? So we gapped up, right? And then guess what? The next red candle came and grabbed that liquidity and then took off, right? So again, if you had a buy limit set right here, then your entry would have been somewhere within the gap. Your stop loss should have been somewhere below the swing, and your take profit should be somewhere near this high right here. All right. So really about like right there, right? That would have been your order. It would have looked like this. Boom, bam, and voila. You can see 1 to 4. So what was the 1 to 2? 1 to 2 was boom, right there. Guys, just ridiculous. Just ridiculous. Watch this, watch this, watch this, watch this. Horizontal line. I'm gonna put it at the 1 to 2 and tell me like that's not capturing structure. Guys, it's ridiculous, man. It's ridiculous. Let me ask you, Nikki or Lisa, either one of you guys can take this, all right? I'm looking in this area. Do you guys see any gaps in the candles?
Yes.
All right, who said that?
Lisa.
All right, Lisa, where's the gap?
The major green one right there, and then
Right.
the 2 bigger green ones.
So this one and this one.
Yes.
All right, so where should I start to create my gap? So tell
At
me,
the top of the little green candle, the wick
this one?
right there.
Okay.
Up into
All
the
right.
wick of the doji.
Of this doji
Yes.
right here. All right.
Yes.
Do you believe that's right?
Of the fair value gap, yes.
And that's what I want to hear. Confidence. Okay, that tells me you got it, and absolutely, that's what it is. You got another test of it, shot right up, and this is on the 4-hour time frame. So this isn't some little amount of pips, right? We got it from the gap, and we took it up. That's 136 pips, 140 pips in 8 hours. Okay, on a standard lot, that's $1,400 in one of your work days. Guys, the money's there, right? The discipline, the knowledge, the patience, okay? The understanding of concepts, the doing the homework, all of that part is on you. Okay, guys? So great job, Lisa. Now, I'm going to test you, Nikki, and I need you to tell me where it's at. I'm looking at right here. All right, what do we got?
Okay, so I have a question.
Yeah.
So it doesn't matter what color the candles are, right?
No.
Okay.
That's a great question.
Okay, so when you just drew that, I need to start at the top then, right? And find the first one, because it's a bunch of them.
Don't doubt yourself. Just go with what you feel.
Okay.
We will adjust anything as necessary because I want you to see you may very well have it, but you're doubting it so much like you're overthinking it too much. You know what I'm saying? We're just looking for any gaps. If you look at any 3 of these candles and it looks like there was a gap, just say, hey, I think it's a gap right there. I want you to put it from here to here. And if you happen to be wrong, we'll adjust it. You know what I mean?
Okay.
But that adjustment will start to get you to fine tune how you're seeing the gaps. And all it takes is 1 or 2 times. It's over with, Nikki. All right. So you let me know.
Okay, so it's a bunch of them.
Okay, that's good. I'm glad you see. Go ahead. Go ahead. You let me know. So again, left, right, up or down. You let me know where to go.
Okay, so just taking that second red candle over to that green one. So that would be the 3 candles, right?
So you're talking 1, 2, 3. Is that what you're saying? Okay, so 1, 2, and 3, right? Just these 3. Okay, these are not. There's no gap here.
There's no gap.
There's no gap there. But you were close.
Is it the next one then?
Like this one?
Yeah.
Nope. There's no gap there.
There's no gap. I'm talking about with those 3. The other, those 2 and that one.
Okay, 1, 2, 3, or 1, 2, 3. So the red, red, green, or the red, green, red.
Okay, the red, green, red.
Red, green, red. These three.
Mhm.
There's no gap, and I'm glad. Let me tell you why there's no gap. This is the top of the wick right here
Mhm.
of that candle. I'm just put this little line. Okay, and now you can see the wick of the third candle. It also came to that same price, so there is no gap in the price. Are you with me?
Okay, so it would have to be the first 3 candles then.
Boom, boom, shakalaka. All right. So now you tell me where to put this gap. You let me know where.
So at the top of the wick,
Of
the first one, the first red.
here's the top of the wick up here.
Uh-huh.
That's where you want me to start?
Yes.
Okay, I'm clicking that. All right, where should I go now?
So that second wick never came to.
Come on, which second
You go
wick?
straight across, right?
Like this?
Yeah, you got to make it wider, right?
Oh, you mean like this?
Yeah.
Okay, you think this is where the gap is?
Okay, now I'm totally confused.
All right, all right. Watch me, watch me. You were on track. All right, you were right there. I thought you was gonna give it to me when you said these three red candles because I was ready for you.
Yeah.
1, 2, 3 does have a gap, but here's where you place it. This first candle, second candle, third candle. It's just the 1 and the 3. They need to have the gap, and they do. The wick for the first candle stops right here. I'm gonna place my rectangle right there, and then over here on this third candle, the wick stops right there. So I'm gonna place my block to be there, and then all I'm gonna do is label it as a gap. But this is the gap between that third candle. I'm sorry, between that first candle, the wick, the bottom wick of that first candle, and the top of the wick of this third candle. So do you see how they don't share price? Like there's no wick that comes down into this gap, just like there's no wick that comes up into the gap. So there is where your gap is.
Okay, gotcha.
Okay, so I thought you saw that because you were right on the money with these 3. There was the gap that sat there, but now there's another gap. So
So I have a question then.
Mhm.
So when you're doing a sale, it's from the bottom wick. When you're doing a buy, it's from the top wick.
Okay, so here would
When
be
you're
the
drawing it, I'm sorry.
yes. So here was that wick that Lisa found. I'm sorry, not the wick. The gap that Lisa found, right, was from the top of this candle to that little doji candle, the bottom of it, right? So again, it was still 3 candles, 1, 2, 3, but you can see that this wick doesn't get into this gap or this box, and this wick doesn't go higher and get into the box. So that was our gap to the upside because the candles were going up, and then here is where we had our candles to the downside, right there and right there, right? So again, we label it correctly, and there you have it. So we have a gap to the upside where this first candle and this third candle, they don't share price. So we grab it from the top of the wick on this candle, and we stop it at the bottom of the wick of that third candle for the buying gaps. For the seller's gaps, we grab it from the bottom of the first candle to the top of the third candle.
Yeah.
Does that
Okay.
make sense?
Yep.
All right. So now you got to give me the other gap because you were super close. You were right there. You just marked it wrong. Okay. But now give me the other gap that you see in this whole little area. All right. Tell me where it is.
Okay, so that green one.
This one?
Nope.
This one?
Yes.
Okay. This green candle.
Oh, nope, no.
Okay.
So go to, hold on. We're still going down. So
That's
wait a
right.
minute, wait a minute. Okay, so there's a gap from that green one. The bottom of that green one to the top of the other green.
So bottom of the screen to the top of the screen.
Yeah.
Got it. You got it. You got it. You absolutely got it. Now, can you explain to me why? I just want to hear if you got it. Why is this a gap, right? Why did you mark this area as your fair value gap that's to the downside? Why this area?
Because no wick entered into that area.
Boom. And that goes for the first candle and that third candle.
That third candle.
You with me? So now you've been able to identify the gap, Nikki, but there's more to this gap thing. Why are we making these gaps on the chart? Tell me, why do we even mark them on the chart? Why are we doing that?
Okay, so that's where I'm trying to understand. So
the reason
is it because
go ahead. Okay. No, go.
Okay, so this has nothing to do with where price can get to, or where they will pull back and come and pick up your liquidity, or you put your stop loss behind that.
Yes, that is the answer. This is the area where price can come back to, and it is an area where you want to look for a selling opportunity. Are you with me?
Mm-hmm.
So watch this. Watch how I extend this out, and let's see what happens. Oh my God! So you mean to tell me price made this gap, pushed down a little bit, did a little dance, and then on this bull candle, it touched that gap, and since it touched that gap, it's tanked down? Wait, what? So you mean to tell me if I had an order that sat right here in this gap with my stop loss anywhere above one of these highs, right? You could have had it here, right, above this structure. You could have had it here above this, and then of course above the actual real big time swing, right? 188 pips, right? And then of course you're aiming for your 1 to 2. Oh my God. Somebody come look at this. Somebody come look at this. Guys, you can see this is a big wick on this time frame, but you can drop down to the lower time frame, 1 hour, reset the chart, get to it. Hold on. I'm gonna get it. Here it is. Boom, there's that gap. And oh my God. Not only did you get the retest, guys, but if you were patient, you got the bearish pressure, which ended up being a bearish engulfing candle coming right off that gap. So yes, it would have been perfect if you had a buy limit order here, but guess what? Now, because you came down to the lower time frame and you got more detail, you really would have got in from right here, the close of this bear candle, and you would have placed your stop loss right behind the gap. And then of course, go for your 1 and 2. You still probably would have made your profit at some point. Let me see. There it is. Kaboom. But did it hit your? Yeah. So again, this is why you want to go behind the swing, right? Go behind the swing, give it a little breathing room, and you would have survived all of this pullback, all of that, guys, to go ahead and have your take profit smash. I have been through this so many times, guys, especially when I started to turn that new leaf of just throwing my hands up and saying, okay, forget it. I'm going to just put my stop loss behind that swing that's way up there, and I'm going to see what happens. Guys, I've been in it. This is hours. This took, man, y'all don't understand, man. I'm telling y'all. All right, 285 pips, it went against me for 9 days, but really, it went 345 pips against me for 34 days. That's a whole month. Again, guys, this is not your typical, this is not your norm, blah, blah, blah. But for a swing trader, yes, this is definitely a normal thing. But just the concept, all right? The time frame is going to change, right? But the concept of what you're doing, it's going to stay the same across every pair, across every asset, and across every entry point that you're looking to trade off of. So if you're a day trader, swing trader, or scalper, it doesn't matter, guys. Place your stop above that previous swing low swing high for a sell, and below that previous swing low for a buy. Let it do your 1 and 2, let it play out, just let it go. Sometimes you got to lose it, right? Sometimes you got to see if you're actually going to lose it, because you will be surprised. It will come right to your stop loss and just completely turn around. It happens all the time, guys. Ghost, what's up?
Okay, I'm a little confused. I got a situation where I want to understand. With your experience and everything that you've been seeing and watching the charts for so long, you can spot a gap so easy. For me, it's not as easy. I understand it when you zoom in quick and you see the gap. I know how to place it and all that. But is there any way that you can just how can I say it? A shorter cut for us to be able to spot a gap quickly just by glancing? Like your eyes just go across the chart and you're like, okay, I see a gap. Because that's where I'm having problems at. I would have to go through each candle from right now what I'm looking at, and I think that's kind of hard for me, because I'm like, how did they just see that gap? I know if it's a long candle, I go to that one first just to see if it's a gap right there. Then maybe it is, maybe it isn't. As far as me just looking at a glance, like, okay, where my gap's at? I can't just identify them as quick, even though I know you got more experience. Is there some kind of way that we can identify just as quickly without having the same kind of experience?
Yep, and I'm going to send it to you right now. So hold on. Auto plot levels, trend lines, auto plot fib. Hold on, give me a second. Okay. Okay, take that back. No, so there's some shortcuts in TradingView, and there are some indicators that automatically plot certain things. So there's an indicator that plots chart patterns. There's an indicator that plots your zones and your levels. So that one might be, I'll give you that one, because that one might identify like gaps, but I'm not 100% sure because I don't use it. There's one that auto plots your Fibonacci retracement. There's one that auto plots your trend lines and RSI divergence. All of those things are major keys, right? But there's not one that I see here. I thought I saw it before, and that's why I answered you yes. I thought I saw one that auto plots the gaps in the market, but I'm sure there's an indicator out there for that, bro. So I'm going to do some research and look for that for you to see which one seems to be yes. Oh, yes. Anybody got it? Yeah, go ahead.
I've got one. It's a real good one. It is your indicator that's called FVG. And if you look it up, it's under Nephew Sam. I've been using it for some time. I don't use it any longer because I can identify them. That one right there. Wonderful. It's an excellent one to train your eye. And it will show you both bear and bull scenarios.
Oh, very nice. All right, hold on 1 second. Let me get this to you. Well, you can pull it up, right? It was simple. Goes to do it. And look at that. Like, it's already, let me get rid of this, right? So here, there it is. It's already automatically plotting it for you, bro. There's a gap from here to here. There's a gap from here to here. There's one from here to here. There's a buyer's gap from here to here. And it makes it red and green, which is perfect, bro. So you know that this is your gap up, and you know that these are your gaps down. So thank you, Lisa, for that. Big time.
You're welcome.
Yeah, I appreciate it. Thank you, Lisa. That helped me out a whole lot.
Sure.
I love it. I love it. Anything else? Nikki, definitely get that one. Okay. So that'll get you right. You know what I'm saying? Like, all you got to do is train your eye. Once you train it, by seeing it a few times, it's history after that.
I have a question though.
Yeah,
so this does the same thing pretty much as the Fibonacci, though, right? Or
this indicator?
Mm-hmm.
No.
No, I meant okay. So what we just went over, the gaps.
Mhm.
So that's totally different from Fibonacci.
Yes, but I can see where you're probably thinking that it can have something to do with Fibonacci, because whenever the gaps are created, you're looking for price to pull back to that gap, and then Fibonacci is all about the pullbacks. You with me? Like how
Yeah.
far price will pull back. So like if we just take Fibonacci from this high to this low, we'll probably have a Fibonacci that sits right in this level where this gap is. So I'm going to do that just to see, right? So from the high to the low, and what do you know? Right off the 38.2 Fibonacci level. So it's not related, right? But I think I can kind of see how you were viewing that. You know what I mean? Because you understood that once you have the gap, we're looking for it to pull back to that gap, and you probably associated the pullback with Fibonacci, and boom,
I
right?
did. Okay.
So that's what that's all about. And that's actually, you know, a good way to kind of like think about it too. You know what I mean? Have that, you know, have those gaps, have you ready to like place a Fibonacci so that you can see, man, if I get a Fibonacci level in that gap at the same time, it's gonna be money. And look, oh my God, look, guys, look at where each Fibonacci level sits in each one of the gaps, guys. Crazy, crazy, guys. Okay, but I'm telling y'all, man, put it together. Put it together. Come talk to me, DM me, call me, do what you got to do if it's not clear, but put it together, guys, and it's going to be a absolute wrap. It's going to be a wrap, guys. How do you read the long and short position tool for 1 to 2 trades? I got you on that. So give me a second. Let me just kind of clean up. So on that, let's do day. All right. Oh, thank you for that indicator, Lisa. You just made my workload a lot easier. Right. But here, all right. So now let me go ahead and buy, all right, from right here, because that's what I believe price is going to do on this pound JPY pair. Okay. So what I would do is, this is where price is right here. So I would take the long position tool and I'll just place it right here. Again, when you're placing the tool, this isn't you buying. Okay. This is you simulating what your order would look like, or like how you want to go about buying it, right? Where you want to put your stop loss, where you want to put your take profit, but then you actually have to hit buy to actually get into the trade. All right. But the way I'm reading this is like this, where when I hover my mouse over the long position tool, right here in the middle, what it's giving you, the first number is giving you the amount of pips, but it's giving you in this decimal format. So 0.039 on this pair is really 3 pips. That's what it is. It's just 3 pips, because you have to drop off that third number after the octet. And again, I mean, no, I'm talking computers. That third number after the decimal, okay? You have to drop it. So you're really just reading the 2 numbers after the decimal, which is 0.4. So that's just like 4 pips, okay? But that's what it's giving you on this number. It's just the pip amount in decimal format. Here, I'm not really sure what this is. I don't really know what this is. Let me see something. Hold on. 134. I don't know. Yeah, I don't know what this is. But then here is just your risk to reward ratio in that number. So every trade that you get into, you want to be at a risk reward level of at least, you want this to say at least 2, because what this is saying right now at 1 is that you're risking $1 to make $1. And basically what you see here is this is 185 pips and this is 192 pips, right? So we just bring this down just a bit for 1 to 1. You can see 185, 186. So you're not really gaining more than you're willing to risk. And that's not a good thing, especially for if you start losing trades back to back. So you end up losing 5 trades back to back with a 1-to-1 risk to reward. That means you have to win your next 5 trades just to break even. You're spinning your wheels doing that, right? Having that kind of risk to reward ratio doesn't mean that you won't win. But what it does mean is that if you lose, in order to get that money back, you have to win. Do you understand what I'm saying? Like if you keep losing every single one of your trades, you're never going to be able to make any money back by just continuously having 1-to-1 ratios. You may lose 5, but you may win 3. You're still down. You may lose 5 and win 4. You're still down. It's only until you lose 5 and then you win 5, now you're back at break even. You don't want to do that. You will absolutely say forget Forex, because it's not lucrative. You're not getting any kind of return on your investment, and you spending a lot of time taking a lot of trades and nothing's coming about of it, right? You don't do that. Always aim for a 1-to-2 risk to reward, because there's a what am I trying to say? Method. There's a method to the madness, right? And what I'm getting at is that when you do this, right, when you take a trade and you're at least aiming for 2, as you can see, there's more green than there's red, right? So you're risking to make more than you're risking to actually lose on this trade. And what happens is when you have a situation like this, right? I'm gonna place 2 trades on here, all right? So it won't let me make it smaller, but boom, that's 1. And here is another trade. Like, let's just say we get in up here, right? So the scenario plays out like this. First trade, it comes up a little bit, but then it hits your stop loss. You lost it. All right. So you lost however many pips that was, and that's what it is. But now on the second trade, after it's done, after when it grabbed the liquidity, guys, stop loss sit behind here, stop loss sit behind here, sits behind here. It grabbed all that liquidity. Thank you for putting the money on the table for us. We appreciate it. All right, now we're going to go and, push it in your direction. So now they go start pushing it in your direction, but you got an order that sits up here. Guess what? That order gets activated, and now price hits your take profit. Well, guess what? That loss that you took on this trade, you just double your money in winning. So what happened is you made up the loss and you won more money on top of it because you had a risk to reward ratio of 1 to 2. So this is the type of risk to reward you want to have, because when you have this, you can lose more trades than you win and still come out profitable. You can literally lose 2 trades that hit your stop loss, and then you win 1 trade and it recovers all your losses. So you're back to break even. But remember, you lost 2, you won 1. Please have a risk to reward ratio, ladies and gentlemen, of at least 1 to 2. It will save you tremendous headaches. If you can get something more than a 1 to 2, even better. But at least a 1 to 2 is what you want to have. So, Annette, does that answer it for you? Perfect. All right, guys, this is our time. Any other questions? Any other concerns? Anything you guys want to take a quick look at since the market is open now? Okie dokie. All right, you guys are absolutely welcome. Again, if you haven't heard my tracks that I posted in the Discord, please go and check those out. Definitely want you guys bopping over the weekend. All right, when it comes, especially if you happen to have a great trading week, possibly even a great payday Friday, like we did this previous Friday, right? You guys can get jiggy with that. Spoiler, okay? I'm going to have a competition, all right, that I'm going to send out to everyone, where I would like to see, for those of you who have kids, okay, I would like to see your kid come up with a dance to my Forex bop song. And whoever gives me the best dance, I will give you guys a nice cash reward. All right, so look out for that. I'm going to be dropping that probably within the month. Okay, so that's going to be one thing that you guys can look forward to. Tell the kids they better kill it. All right, because it's going to be some good money on the line. All right, ladies and gentlemen. But in the meantime, in between time, I will see you guys when this is recorded. I'll get it out to you guys. And yeah, this was definitely a great session. Thank you guys for the questions, being honest, that you understand or you don't understand, and also just helping everybody out. Lisa, big time for that indicator. And everyone else, thank you as well. But yeah, guys, see you guys later. All right, peace.